Hey guys, how's it going? It's Justin here again from Simplified Investing. I wanted to put together this really important video on how to use proper account management on Fridays, especially if you guys are going to be playing the same day expirations like I do. I really wanted to put together this video to help you guys out and understand the risk involved with trading the same day expiration and how I personally use these to benefit my portfolio. So before starting off, if you could subscribe to our channel, it would be greatly appreciated, and like this video. And as always, if you could leave comments or concerns below, they are also greatly appreciated. We always check those comments that you guys leave, and they are, again, greatly appreciated. So if you guys aren't members, or if you are, you guys know that I do play Friday expirations, which are going to be a lot more volatile, but they can be really rewarding if you understand the risk involved with them and know how to play them. So what I recommend for you guys is, you guys know, if you're a member or if you're not, always play Friday expirations as a lotto. So one thing that happens with these contracts when they do expire on the same day, it's not uncommon to see, say, a 100% move or whatever it might be within 10 to 15 minutes. So this move right here would have been over 100%. And Disney is a perfect example, and Disney is even one that we tried playing today. So you get this reversal candlestick here to the downside, you get this breakthrough, this resistance right here, and look at that false breakout right here into this really big consolidation channel here. Normally on, say, Monday through Wednesday, this wouldn't really hurt premiums. However, if you are trading on Fridays, this move right here has already killed the premiums on both sides by over 50% without Disney moving in one direction or another. Just by playing it and trying to play Disney from 850 to now, you would be down 50% whether you bought a call or you bought a put, and that truly is the reason why you have to play these Friday expirations so light. They aren't, especially on choppy markets, playing Friday expirations with lotto is going to be so key. And you may wonder what I mean by a lotto position. Basically what I mean by this is, don't go in heavy with your account. I never do. I never recommend this on Friday because the risk involved is not worth it. Is it really worth losing all your weekly profits just from making a dumb mistake on a Friday expiration play on Friday? It's not worth it, and it never will be. And that's something that I always praise to people. Don't just actively search for plays, especially on Friday. When you get this chop like this, it's going to be very difficult to play both sides. You can get this breakout here, but then you enter a consolidation channel here, and it just ends up eating premiums on both sides. So what that means is, you could get here, enter puts like we did, and you lose premium just by this move right here, or you could play this breakout right here and enter calls, and you'd still be down 50%, which makes it so difficult to play the same day expirations. But again, they are really helpful if you can find a pattern to scalp. And the one thing too, Robinhood does not have these same day expirations, which is, on their part, they do it to protect their members or their customers from trading the same day expirations. They know it is very risky and volatile for people to play, so that is something that they don't do. One thing that I recommend to people, if you are in this boat, or if you're just starting out and you're not comfortable playing Fridays, that's completely fine too. You can always purchase the next week's contracts, so the ones that expire next Friday. They will have more premium on them, but they will not move as fast. So again, if you're starting out or you just aren't comfortable with that position, you can always just play those next week contracts. Again, they won't move as fast, but you can still play them. Again, make sure you guys play Friday plays as a lotto. I can't stress this enough. I see a lot of people putting in a lot of their account into Friday plays, which is going to be extremely difficult. I never recommend going in heavy on any play for that matter. However, especially on Friday, I don't recommend going in with over 5% of your account on these positions, because it doesn't pay to have that increased risk for that reward, especially on a Friday same day expiration. You can see I've already went through Disney several times. That is the case on Disney as well. So now I will run through 4 things that I do on Fridays, because as you guys know, you're probably wondering, well, why do you play them then if you're talking about them like this? I play them simply because I have found good success with them if you are very careful playing them. Now, it's difficult to start out and play these simply because of the fast nature of the way they move and how volatile they are, but you can find success playing Friday expirations, given and known the risk is going to be the key part. So what I do, I'll go through 4 steps quick on what I do to help me with Friday plays and how I have found success trading them. The first one is going to be limit your size. Like I just mentioned before, do not go in on Friday plays, especially anything over 5% of your account. You're just asking for, say, a position to go down. Say you go in with 50% of your account and there you get a 5-minute move here on Disney and your account could be down 25%. It's not worth that added risk on Fridays. So what I do is I always limit my size, especially on Fridays. That's going to be the biggest key component to helping play these alerts to the best of their benefit. The second thing I do is I maintain a tight stop loss or level. As you guys know, and if you're members, I don't per se set a 10% stop loss or whatever it might be. I watch key levels on Disney right here, and what I ended up doing was cutting Disney on this breakthrough here and practicing safe account management on this breakthrough here, and ultimately helping preserve my capital on this position. That is going to be very, very key to maintain tight stop loss levels and support, or not support, I should say, or percentages. You could set a 10 to 15% stop loss, for example. However, I have found it much more beneficial to watch key levels and manually enter my positions at these levels rather than just playing, say, a percent-wise, especially on Fridays, as a lot of times you could get stopped out without the pattern actually breaking that you are watching and then losing a position already. The last one, actually the third one, not the last one, is going to be check the spreads in the market. What this means is a lot of times these Friday contracts are going to have very high spreads. So say the bid will be $1 and the ask will be $1.50. Sometimes the market makers will get people who are beginning traders and they will get buy-in at $1.50, for example, at the ask with that huge spread, and then boom, the price goes down to $1.25, for example, on that spread. Once more buyers come in for that position, then you're already down 20% right there off of that position without even considering the move of the underlying. So I always check those spreads. That's something that I check. Fridays are going to be really difficult. I normally don't like spreads that are over, say, 3 to 4%, even 5%. However, Fridays it's going to be very, very difficult, but this is something to keep an eye on. And the second thing to keep an eye on, and something that I did today, is going to be the market conditions. You can see all of this chop here on SPY today. There's no really clear move to the upside. You get this rejection here at 28, 46, 38, and then we get this push down, and now you see this big consolidation here. That is going to be good if you are playing next week's premiums. However, if you're playing the same day premiums and you get this side-to-side movement here, it is going to end up eating premiums. So you got to check the underlying, the market, to watch for a move rather than per se just watching the underlying or your spreads. And the last one is going to be never hold for hope. I see this a lot of times too, especially on a Friday expiration. People will hold this position and say, hope Disney breaks below this 106 trend line here, when in reality, if you're just holding, especially on a choppy market like today, it's just going to eat premiums on both sides and burn your position faster and faster as you hold on. So what I recommend is having your plan, and if it doesn't stick to your plan, just close out. It's simply going to be a loss. Every trader faces them. It's how you move on from them and how you can cut them short and let your winners run faster to ultimately help grow your account. So I hope you guys found this video helpful. If you have any questions or comments, please leave them below. Again, I can't stress this enough. Make sure to play these Friday expirations as a lotto play, simply due to the increased risk nature of these positions. Hope you guys all have a great day and an amazing weekend, and I look forward to having you guys on Monday. Thank you.